Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again on the euro currency. So the previous week has brought a lot of surprises, especially in the behavior of the investors, and reaction on the investors at some events. So the common sense suggests the opposite, but investors are so exciting about the overall talkings about the possible providing of the new stimulus that they just behaves a bit irrational, and it was really a surprise of the market reaction on the statement that is made in Congress and the Senate that they have not come to an agreement about the stimulus pack. So Donald Trump on Tuesday in general said that Congress should take off the table any discussion on the new stimulus till the elections. But despite of that, investors has increased demand for risky assets, was encouraging just by the minor word from the Ms. Pelosi said that we will continue the talkings about the stimulus pack. That was enough just to push markets higher. Despite that no agreement were achieved, despite that Donald Trump said to contract that to close this discussion till the elections, this minor word that negotiations will continue, this was enough. So it just indicates that sentiment of the investors. They're so exciting, so desire for some breakthrough in the topic of the stimulus that they're ready to treat any words as a positive, although they are not the positive in general. So that makes really difficult to apply the common sense to understanding on the overall fundamental background currently. So based on our weekly report, we come to conclusion that there are two major events that drive the market currently. This expectation of the election, and particularly the rating of the Joe Biden. And second is the talkings about the stimulus. So that's two moments that investors will closely intend to keep an eye on till the elections. So maybe some news on the gross domestic product released by the end of the October also will bring some volatility on the market, but the major events are the rating of the Joe Biden and the statements and talkings, rumors about the stimulus pack. Both of these factors work against the United States dollar. So as the Biden takes the lead and talkings on the stimulus holds, this support demand for the risky assets and decrease the value of the United States dollar. While the Joe Biden will start to lose the leadership in Iran, or this will be a definite closing of the discussion on the stimulus, that will support the United States dollar. So that's the balance that we have currently in the market and the fundamental background. But since the investors stand in euphoria on recent event, and overall price action we could describe only as surprising a bit and quite rational, we have no choice but trying to follow the overall sentiment that stands on the market. And by the technical view, take a look. The market actually has broken for the very important resistance level that is challenged for a week approximately, or even longer. It's 1750. This was just the confluence resistance on the intraday chart, but that was also natural support resistance area that separates the former head and shoulders range and the range below it. And the market now is returning back in the range of the head and shoulders. This range has become open to more price fluctuation and makes it easier just for the market to reach the previous top, return back to the 120 area. That makes changes in our medium-term perspective, and we return back to the idea of the double repo sell pattern on the weekly chart. So you could read about it in the weekly report. Other factors that we have, take a look, market has exceeded harmonic swing And also the monthly pivot point has been broken. That also stands in the same resistance area. So that's really rock hard resistance level that has been broken. That means something. So in general, if we would suggest market stands in the retracement, this level absolutely was enough to hold any retracement and to push market lower and downward continuation. That has not happened, and that means really a lot. Existence of the last outpost for the bears around 1858 hardly will change the situation significantly. We do not exclude reaction, moderate reaction on the first touch of this level, but if this strong level was not able to stop the action, hardly the single stand level will do this. So yes, meaningful retracement here is possible, but chances on upward continuation here, at least back to the previous top, is 120, or weekly pivot resistance one around 1950, now stands very, very, very high. What the trading plan we could follow on the next week? First, let's take a look on the 4-hour time frame chart. Here we actually have the same picture that we discussed on Friday. That's our major destination point in a short-term perspective. So market is tending to this last fib level, and around this level stand a lot of targets that makes this level really strong. So as you can see, this will be A, B, C, D target. It creates agreement with the 1860, and also this upper direction could be finalized by the pair of lives 1618 extension in the same area. Currently, market stands at the minor target of the butterfly is 127, it's 1830. So maybe here is just minor pullback will happen. So our trading plan first suggests reaching of this level. So if you trade on intraday charts, the scalp bears could consider here taking the short position, because at the first touch of this level, we probably will get some bounce. That should be enough to protect your position with the break-even stop, and just see what levels could be reached. Second step in our trading plan is to watching for major support levels that market could reach. That will be the target first for the bears who are taking the position, and that will be the levels for bulls to consider taking the long position. Here on the hourly chart, I have built the levels in advance of the current price. So these levels are based not on the current top in 1830, but on the suggestion market will reach the 1860 and will start the pullback down from it. So these levels are based on the 1860 top. In this case, we consider two levels, 1795, and the most important is 1750, 1767, which will be confidence support. This level is very important by another reason, because that was former confidence resistance that has been broken. That was former neckline of the hand shoulders on the daily, and retesting of this level will be logical. So that's a major target for the bears who will take the short position around 1860 level. For position taking, we will use these two levels. Maybe we'll apply the scale in opportunity for just taking some part here, then market will drop low, take the major part of the position here. But anyway, the stop loss order initially should be placed below this confidence. Once market will hit this level at the first touch and start the bounce up, we have to move stops to the break-even, because we do not know the following reaction. If our trading plan will be correct, and indeed market is coming to 120, right somewhere from these levels, market should reestablish upward action again. If we will be wrong, market will drop 1750. That will tell us that our trading plan is wrong, or at least will not be completed, and we will have to watch what will happen, creating the new trading plan. So, but at the first touch, if you will take in the long position here, use first bounce up from the confidence to move stop the break-even to protect your position. That's very important. We suggest that probably it should work and market should proceed higher, because overall price action really shows some investors overreaction in recent news and really very positive sentiment, too positive I would say. In such environment, very probable that market will continue upward action. But who knows? Maybe some news will be released. We should be careful and just keep the nose to the wind and see what will happen. So that's what we intend to do on the euro currency in the coming week. Let's see how it will turn.